Hello, everyone, and thank you for joining Fundera's live Q&A session on Paycheck Protection Program loans. We do these sessions every Tuesday and Thursday to keep you informed about any updates to the Paycheck Protection Program and PPP loan forgiveness. You'll have a chance to ask our internal loan forgiveness expert and Senior Director of Finance, Justin Ridgely, any questions you may have. I'm Shannon Smith, part of Fundera's webinar team, and will be hosting this webinar alongside Justin. You can submit any questions you may have ahead of time by using the Google form, which we include in the webinar follow-up emails. You can also submit your questions during this webinar by using the Zoom Q&A box. If you have any questions we don't get to, you can find our team on Twitter or email support@fundera.com. We'll also try to include any questions we don't get to today in the next session happening on Thursday at 1 p.m. ET. We also have a new webinar on SBA 7A loans this Thursday at 2 p.m. If you want to learn more about this popular form of financing, our follow-up email today will include a registration link. As always, we'll also send you a recording of today's webinar and additional resources. With that covered, I'm going to hand it over to Justin, who will provide the latest updates about the Paycheck Protection Program before we get into questions.
Thanks, Shannon. So I have on the screen right now a disclaimer, which the slides we share for these webinars cover a wide range of forgiveness topics. They're somewhat updated, but not fully updated for the recently passed Payroll or Paycheck Protection Program Flexibility Act, and frankly, they're hard to update because we haven't gotten the full new version of the SBA application. So just wanted to make this bear this in mind, but we can still talk through the Q&A, and I'll hit on some updates here. Next slide. Okay. So the yesterday, Treasury Secretary Mnuchin and SBA Administrator Jovita Carranza put out a kind of a press release that served to clarify at least one important point that was brought up in the wake of the passage of the Flexibility Act, and that was the idea that by reducing this 75% payroll threshold to 60%, the language actually made it unclear whether this would be a cliff or not. And by cliff, what people were wondering was, okay, if I achieve 59% of my expenses on payroll during this period, will I get no forgiveness? And there were some concerns from various senators, Marco Rubio included, about whether this would actually be bad for borrowers if this was read this way. But what happened, was when the act was passed, there was a letter put in by the Senate, and then Mnuchin and Jovita Carranza kind of came on scene yesterday and clarified this and said, no, this is not a cliff. The math still works out as I have in sub-bullet 3 here, which basically says your maximum forgiveness is now whatever you spend, divided by 60%. So it does allow you to push more expenses towards non-payroll costs, and you can still achieve partial forgiveness based on what you actually spend in the approved categories. So this is good news for anyone that's taken PPP or plans to in the next few weeks. With that, Shannon, I think we can go ahead and just jump into Q&A. I think there are some questions that I think we have some answers to, and I think a lot of questions around how this 24-week versus 8-week period will work. So happy to jump right in.
Great, thanks for the update, Justin. Our first question is about the safe harbor date. If you have met all qualifications of loan forgiveness in a shorter period of time, can you use the last day of fund use as your safe harbor date and submit your application for loan forgiveness then?
So this is one point that's not been completely clarified. Since the safe harbor date was pushed back from June 30th all the way to December 31st, it's obviously a lot longer period of time. And if you're a business that says, okay, I've recovered to my headcount level maybe by October, or even September, even August, and I've spent all my funds and I want to submit for forgiveness now, it seems reasonable that you should be able to do so and not be penalized, especially because you don't know what then may happen with your business between, say, September and December 31st. I think it made more sense logically to, with the 630 date because it was earlier, but now I'm hoping that the SBA will clarify this so it says, basically when you apply that essentially, ends your kind of period of measurement of these, potential reductions. I also just think, logistically, if you apply for forgiveness on September 30th, you had no FTE reductions compared to the prior period. I wouldn't expect then the bank or the SBA to then come back to you on 12/31 and say, well, how many employees do you have on your payroll now? I just don't think that makes much sense. So I would expect it to work as the question asks, where, if you spend the money before that period ends, you can apply then and get full forgiveness then. But again, we don't know that for sure. It's just we're hoping to hear that clarification from the SBA.
Great. The next question is, can an independent contractor with no employees pay themselves after 2 months in order to not conflict with PUA unemployment?
Theoretically, yes. Now that the period is longer, you could theoretically collect unemployment and then pay yourself at a later date for the wages you'd otherwise have, paid or be able to earn in a normal environment. There hasn't been any specific prohibition against this for self-employed individuals. So I don't see why not. But that's just my interpretation. Again, there hasn't been any specific guidance on this.
A similar question about independent contractors we have is, if an independent contractor with no employees, are there any restrictions on how they may pay themselves owner replacement income? Can they wait until after 2 months to do so?
Right now, there are no, restrictions on when you have to spend the money. I think it was kind of a necessity to spend it immediately, when the period was only 8 weeks. I mean, with 2.5 times your average monthly payroll being the basis for the loan, you had to spend immediately. Now with the 24-week period, there's obviously going to be some situations where it makes sense for self-employed individuals or business owners with employees to maybe wait to better align this when their businesses are starting to kind of, come back online. Again, we haven't received specific guidance from the SBA on if there will be a date by which you have to start using the funds or any other restrictions on, when you can use the funds, if you have to use a portion each month or anything like that. We just haven't heard. I think to make it, or I'm hope that to make it easy, it's just as long as you spend it in this longer period, you'll be okay. One thing I'm going to kind of preemptively cover, Shannon, because I know we had some questions on this too, is what happens, to the cap on self-employed individuals in terms of the 100,000 pro rata amount. So the way this worked in the 8-week period, world was, I can, as a self-employed individual, I can only pay myself the minimum of, I guess the maximum would be 100K pro rata over 8 weeks, which was, I think, $15,385. Or if you earned less than 100,000 in 2019, the 8-week equivalent of whatever the max that was. So we've heard questions about, okay, if, I'm a self-employed individual, I earned over 100,000 in 2019. I want to pay myself this 15,385. I then can't use all of my loan amount because I don't have enough rent and other expenses to kind of, get to the 100%. Can I now, pay myself, one additional month, which would kind of put me over that threshold, or even 2 additional months, and let me use this over a longer period of time and get the whole thing forgiven just on payroll? The answer to that is we don't know. It depends on whether it's interpreted by the 100K kind of like run rate, or if it's interpreted as a dollar amount. I'm hoping that it comes out to be more of a, you pay yourself at, 100K instead of over 8 weeks, the rate as at 24 weeks, which comes out, I think, to around $43,000 to be the max you could pay yourself as a self-employed individual. So I think, the most guidance that we need, hopefully then we'll get in this next application version and probably a new interim final rule, is around, self-employed individuals with PPP, because I think there's a fair degree of uncertainty.
Another question we have is, can IRA contributions be used for forgiveness for an independent contractor with no employees?
No, this is another point that, it's kind of disadvantages, self-employed individuals, where the only retirement contributions considered as part of payroll are you know, employer paid retirement contributions. And, you know, since you're self-employed, you know, the SBA has viewed these as kind of your own contributions and not to be counted in that amount. It would be nice to see that change, but as of right now, no, self-employed individuals are somewhat disadvantaged in that area.
Next up, we have a participant who wants to know if the covered period is 24 weeks from when they applied and from when they received the loan in mid-April, but the safe harbor date now extends to 12/31. How do they apply for loan forgiveness at the end of the covered period and still show they have every intention of bringing their FTE level up to pre-COVID levels by 12/31?
In this case, I think this goes back to, you know, I think the first question where it says, okay, if I want to apply for forgiveness ahead of the 12/31 date, you know, can I do so, and how do I prove, you know, or does proving that I'm up to the same levels at that date have equal weighting as to showing that at the end of the year? Again, I think probably that will be the case. I think this question kind of hits on something slightly different, which is, you know, if I spend all my money, want to apply in October, but then I still need a little bit more time to bring my FTE level back up by 12/31 so as not to get my forgiveness level reduced, then, you know, in that case, I would suggest just waiting to apply for forgiveness. The new bill that came out also stipulates that you won't owe anything, whether that be principal or interest on this loan, until after after the lender not only gets a forgiveness decision from the SBA, but after they get paid by the SBA and Treasury. So you don't have to, you know, even if you're worried about, okay, I might end up with some of this loan on my books and I don't want to have that accruing interest and so on and so forth. I just want to get this done. You're not going to be disadvantaged in any way by waiting until that 12/31 date after that to apply. So if you think you do need more time to show that you fully recovered your FTE count, then I would think it's probably the best idea is to, you know, wait until you've achieved that level within the end of the year time horizon and apply at that time. But again, we're waiting to see what the specific guidance is around, you know, I want to submit earlier, I have the levels at that time.
Here's a question from a participant who is an independent freelance artist and has no payroll since clients pay them directly as 1099 wages. What proof do they need to provide that they show in order to show that they're using the money as salary replacement?
Yeah, so this is, you know, a question that we touch on in most webinars. I think, you know, this is, again, where you have to get a little creative. You know, potentially if you could create a separate bank account, move your PPP funds in there and pay your normal account out of that separate account, that would show a paper trail. Also, if you keep, you know, accounting books, whether that's in QuickBooks or something like that, or in some sort of other software, then, you know, having, you know, your kind of a general ledger of recording your salary each month out of those funds would also be, you know, a good way to do that. I've even heard of, you know, people writing themselves checks each month out of the single account that they have and then just depositing those back into the account to kind of show a circular paper trail of, you know, this is what I paid myself. I'm not sure how that actually works with banks, but it seems like you could probably do it. I think, you know, the goal is just to establish some sort of arm's length or, you know, third-party documentation that shows the dollar amount on some sort of form or statement or record, you know, that shows what you've paid yourself out of the PPP funds. Because otherwise, you're going to have something to submit. So, you know, people have different situations. I advise people to kind of try to go for that standard and be creative.
Related to that, we have a question about owners who are using the PPP money to pay themselves. If this person has no employees and they want to know whether the PPP money can be used as a draw and forgiven, how do they show the draw when offering proof of how the money was spent?
Yeah, so in this case, I mean, again, this is about you know, having some sort of record, whether that's a transfer from a business bank account to a personal bank account, you know, whether that's, you know, your payroll register or accounting books that, you know, are recording the amount of these draws, you know, that you would report later on your K1 and whatnot. Then, I think that's the same type of standards I discussed with other self-employed individuals. You just have to have some sort of record of either the money moving or the record of payment, or how this impacted your overall P&L, or balance sheet, and so on and so forth. And so I think that again is the standard to go for, is some sort of third-party proof that shows this money moving or being recorded to move to you.
Great, thanks for clarifying that. This next question is about forgivable payroll costs. Do fees paid to a third-party payroll processing service and the employer's share of payroll taxes count? And are payments to independent contractors excluded?
So costs paid to an outside payroll service like ADP or Gusto or one of those do not count. Unfortunately, that's just a normal expense line item. For the share of payroll taxes paid by an employer, the answer to that is no. You cannot, count what you pay in Social Security or Medicare or other types of payroll taxes, directly. The only type of tax paid by the employer that you can count in the payroll costs are state and local taxes paid, which are typically, state unemployment taxes or things of that nature. There are some other, like New York City has a transportation tax, I believe, and maybe a few others like that. But as far as general, normal payroll taxes, FUTA or OASDI, those do not count. The last part of that was, does pay to 1099 contractors count? And the answer to that is no. The way it would work is, that 1099 contractor, as a self-employed individual, would have to apply for their own PPP, and therefore, that counts just as an expense for this employer and not as an employee cost.
This next question is from someone who wants to know if you have any guidance on when the updated PPP loan forgiveness application will be available to reflect the newly passed PPP Flexibility Act.
I don't. The SBA has said, or I think Jovita Carranza, administrator, I think she tweeted that it should be out soon. Typically the SBA has dropped the guidance or the application on Friday evenings. Wouldn't surprise me to see it, this Friday evening. Once they've had this week to kind of process the changes that were made last week, and they don't have to rewrite the whole application; they just have to edit it. So I'm hopeful that maybe we'll see something this Friday, but I don't. There's been no specific timeline communicated by anyone at the SBA other than it's coming.
This next question is from a participant who received a PPP loan and they have an LLC partnership of 2 people, no employees. Is the amount they received for the PPP loan just for one of us or for the entire company?
So if you have no employees, then it depends, I guess, in 2 members. I guess it would depend on what basis you receive the loan. I assume it would be a combination of or one or the other of salary and or distributions to the members. The PPP loan then usage would be based on whichever you used for the loan itself to get the loan amount itself. So if you say you had no salary and just distributions, then distributions is what you would use to show you paid yourselves and can get that forgiven. It's some combination of you pay yourself a salary plus distributions, and you'd use the combination of those 2 for forgiveness as well.
Thanks, Justin. The next question we have is, can you give raises and bonuses to current employees and owners?
Yes, their bonuses are specifically called out in the last rule we got from the SBA as allowable, with no, there's no restriction mentioned on when these bonuses have to be tied to. It just says that bonuses and hazard pay are allowed in that one section. Same with salary or wage increases. These are fine. You're allowed to do that. The only thing you have to worry about is potentially running into this 100K kind of pro rata cap, which again, we're going to have to see how that will play out with the 8 weeks versus 24 weeks. But theoretically, as long as you don't run into that cap, there should be no prohibition against bonuses or increases in pay.
Are federal taxes, such as income taxes, paid directly to the IRS on behalf of the employee eligible to be included in payroll costs?
No, not separately. The costs, that you put in payroll costs are gross, compensation, which is before those taxes are taken out. So therefore, those aren't included separately. So again, the only taxes that you're allowed to include in the payroll costs amount to be forgiven are state and local taxes, which again are typically, a state unemployment tax or something of the like. But FUTA, FICA, OASDI, or other income tax are not cannot be included separately on top of gross compensation in payroll costs.
This next question is from a participant who received funding during the pay period, but the actual pay date was after the funding. Can they claim that payroll towards the loan?
Can you say the first part again, Shannon? I didn't hear it.
Yes. This person received funding for their PPP loan during a pay period, but the actual pay date was after the funding. Can they claim that payroll towards the loan?
Yes, if depending on when you start the covered period. So, and again, this is going to be subject to change probably, or at least clarification on the 24-week versus 8 weeks. But when it was 8 weeks, it was pretty clear that you could either start your loan covered period on the day you receive the funds or the start of your next payroll period. So, what that means is if you received your loan in the middle of a pay period, and then say 7 days later you paid out payroll. By the standard of paid and incurred expenses being eligible, you could use that payroll as part of your forgiveness amount. So, it doesn't necessarily matter, at least so far as we understand the guidance, that the payroll was incurred beforehand because it was paid during the period. Now, if you started it, say, on the next, first day of your next pay period, then you wouldn't be able to do that, but it would be easier from a paperwork standpoint.
Great. The next question is from someone who has received their PPP loan in May and want to start using the PPP money in June. This person wants to know that if they have 24 weeks to spend the money trying to get the staff back, but believe they can get this done in 12 weeks, can they then submit for forgiveness?
Yeah, I mean, there's nothing, I think I kind of covered this before. I mean, there's nothing stopping you from applying for forgiveness besides your bank, which, some of them will come up with different processes and be faster to have those kind of tightened up than others. But, theoretically right now, if you've spent the money and you're at payroll levels that you shouldn't be dinged for forgiveness amounts, then, theoretically there's nothing to stop you. Again, we'll still have to see clarification on how that FTE reduction or salary and wage reduction, does that safe harbor date move up to the point where you apply for the forgiveness if it's before 12/31 or not? And logically, I expect that you will be able to do that, but again, we don't know for sure until that's clarified when the SBA takes the guidance received by the PPPFA and kind of processes it into a new application and a new guidance document.
This next question is from someone who wants to know if PPP funds are all spent to meet the parameters to receive forgiveness, can they return some of the PPP loans to the SBA?
Yes. So mechanically though, you wouldn't return the funds to the SBA. You would just pay back the unused portion of your loan to your lender. So again, if you're in a position where you can't use all these funds, even in 24 weeks, which I think is going to be, given this extension, and most business owners I expect will be able to use all this money over that long of a period. But if you're not, and you don't want, the full loan to, for whatever reason, by loan, it's probably going to be a grant, then sure, you can repay, any portion of your loan at any given time. You could say, I had a $100,000 loan, I was only able to spend, 60,000 of it on payroll, and then 20,000 of it on non-payroll acceptable expenses. I got this 20,000 left when I apply for forgiveness. Then you'll be able to get, as long as you don't run afoul of those other potential rules with FTEs and so forth, then you would have spent 80,000, and you can apply for 80,000 in forgiveness, get 80,000 forgiven, and then pay back the remaining 20,000 to your bank, and then you'd be free and clear.
Great. For this next question, could you clarify if there's a maximum percentage that can be spent on payroll? This person wants to know, for example, if a business with minimal non-payroll costs reaches the full loan amount within 24 weeks of payroll, can they receive full forgiveness based on payroll alone?
Yes, most definitely. Yes, I think this was, this more and more businesses will probably want to do this. To kind of submit this way, given the 24-week period, where before, you may have spent 70 or 80% or 90% or whatever on payroll in an 8-week period. Now with a 24-week period, 3 times the length, I think a lot of businesses will fall into this boat where you can get to the full loan amount just based on payroll alone. Given that, it was designed as the Paycheck Protection Program, I think this is a good thing. And, by making it one category of expenses when you submit for forgiveness, it'll probably ease your paperwork burden a bit too, because you won't have to provide, payroll statements plus rent statements plus utility statements. You'll just have to provide the singular payroll documents, but just for a longer period of time. So no, you can definitely, you don't need to worry about using too much of your dollar amount on payroll. You can use all of it on that if need be.
Great. This next question is about forgivable expenses, and they want to know if workers' comp can be used.
So this is one that's somewhat of a gray area. There are a couple places, in the SBA language that mentions things similar to workers' comp, but not, to my knowledge, workers' comp directly. Now, I know there are a number of businesses that, workers' comp is a legal obligation for them, for their employees, and depending on, what they're doing. And this is kind of part of their payroll. And I did see loans, in the application process back in May that were approved using workers' comp as part of the average monthly payroll. That being said, the SBA has not, specifically called out workers' comp. So my guidance there would be, given the 24-week period, see if you can spend all your money on payroll without that. If you still find yourself in a position where to get to, the level of forgiveness that, where you get to 100%, you need to include it, then I would speak with your bank about it at that time. That is probably months down the road, and hopefully we'll have, more clarification then. But again, if you are in a position where you can cleanly get all this money spent on forgivable costs, like just straight cash compensation, then by all means do so, and don't give yourself the extra burden of trying to prove something that's in a gray area.
Thank you for providing that, Justin. This has been very helpful, but we're coming up on time, so we want to give a big thank you to everyone who joined us today. We do hope to see you again on Thursday to go over any additional updates for the program, as well as answer any questions that we didn't get to today. In the meantime, you can find us on Twitter and support@fundera.com for any of your questions. Please be sure to keep an eye out for the webinar recap email today, which will include the recording and slides from the presentation, as well as additional resources to help. Thanks again for joining us, and we hope you have a wonderful week.
Thanks, Shannon. Thanks, everybody.